Your attention, please. Thank you very much for getting back into the room. With Irvin Rueda as the statistician, we are only 0.5 of a standard deviation away from getting into the room at exactly 11 o'clock. But he predicted with a 97% confidence interval that was going to happen. He did a two-sided T-tail test where the p-value was greater than, I'm stuck. No, thank you very much for being a punctual crowd. It's a good thing when we can get into the room and stick to a schedule and share minds. So just to continue where we started in the morning, there was a disclaimer up front that this is not a staid event where those on high are going to preach from the lectern up here, but we need your hearts and your minds and the ideas that are bubbling in your head. It's a conversation. We have the panel format where whatever is shared is the Socratic method is, to test one fact against another, and you get synthesis and you get better knowledge and better improvement, but it's a day of interaction. We have the session before lunch where there is some financial alchemy, a young man by the name of Jacques, and I promise you he's a stockbroker. I have checked out his credentials. He is Sicilian, so I have to say that. But he's going to show you some financial magic. And after lunch, we have the man of the day, man of the hour, Irvin Rueda. If you guys are technologically savvy, and I'm going to do something to put it up and then follow the hashtag. So I hope you can all sign disclaimers because I'd like to have your image. I'm going to do a selfie with how many people in the room? 200 people in the room. I'm going to put it up on social media. And then you can follow it on the hashtag. That's it. So the hashtag is Rueda, REIM. So it's Rueda, you can spell that. REIM, Real Estate Investor Magazine. And the hashtag, follow that, dispense it to your friends, and let's get the technological thing going. But our next speaker is the publisher of the Real Estate Investor Magazine. He is a young man I've spent a fair amount of time with, in particular climbs. I know he's now a Pan-African publisher. I had a lot of fun with him when he came up to Harare. Yeah, he was a white guy and he made it out of Harare okay. He might have lost a farm or two, but that's beside the point. The publisher of the Real Estate Investor Magazine, an educationalist, a father of two gorgeous daughters. Hello. That wasn't expected. Ladies and gentlemen, Mr. Neil Peterson, welcome.
Wealth is not just about money. Most people are programmed just to work for their money supply. But true wealth is actually our time. We trade away moments of our lives for money, hour by hour, day by day, year by year, instead of getting money to work for us. And that is where we come in. I am Neil Peterson, founder of Real Estate Investor Magazine, author, investor, and real estate communications expert. The question that I have on my mind is, how can we fix the huge wealth gap that we have in the world, and in the process also create wealth for ourselves? My vision is to get people to change their views of how they believe that they can create real sustainable wealth for themselves. And I believe that real estate is the vehicle. Investing in real estate is 80% psychology and 20% mechanics. Too many people focus on the mechanical side of investing instead of using more creativity. And as my friend and mentor Dolph Torres says, use the 6 inches between your head, give it an inch or two, in terms of using your own creativity to invest. So what do? We educate and inspire entrepreneurs, business owners, and investors to build personal wealth for themselves and also to become far better investors. We help them to position their businesses, to get their message out there to the market in a much bigger way so that they can make a huge impact and at the end of the day make more income for themselves. So how do we do it? Well, we do it through sharing insider investment information, content, and great ideas in our magazine in both print and digital formats. I have interviewed and met some of the most influential people in the real estate world so that I can share their failures, their successes, their triumphs, and their philosophies with you. We connect entrepreneurs and investors with some of the greatest experts, professionals, and practitioners from all around the world. And you can access them via our website, our live seminars, our live events, our online training programs, and through our networking events. Real Estate Investor has been around for more than 8 years and is now an established authority in the real estate industry from an investment perspective. We have published more than 80 real estate investor magazines. In addition to that, we do a number of residential, commercial, and offshore property guides that come out on an annual basis. Some of the awards include Top Property Features magazine in 2012 and Best Property Publication in 2013 as awarded by SAPOA. Real Estate Investor has already expanded within Africa to Namibia, Botswana, Zimbabwe, and Mozambique. The big question is, where to next for Real Estate Investor magazine? So if you're looking for more in-depth knowledge, inspiration, or if you want to connect with us, then what you should do is register on our website, www.remag.co.za, and subscribe to our free newsletter. Subscribe to the magazine online or in print, or join one of our free webinars. View our videos, whether it's on training, whether it's on interviews for our master investor, or insights on the property market. Attend one of our live events. Follow us on Twitter and Facebook. The links are online. We look forward to interacting with you. Prosperous investing. Can I just see by a show of hands, how many people are readers of Real Estate Investor magazine? Okay, rather, how many do not know the magazine? Anybody? Well, I think, we're going to learn over the next day that, education is knowledge and the application of education and utilizing that information to your best. And I think that's really where Real Estate Investor is all about. What I'm really excited about is that I've met so many people in real estate in South Africa and all around the world. And we are independent. We don't belong to a property company or anything like that. We are completely and utterly and totally independent. And the reason is that we can share that information with people all around the world in terms of the different strategies within residential, commercial, and offshore. And I'm not here to give you a pitch about the magazine at all. In fact, I'm here to talk about the future trends in real estate, the good, the bad, the ugly. Now, I'm sure you agree that the messages that came through this morning were not very positive. The news flow out there is not very good. So what I'm going to do, I'm going to talk about the good, the bad, and the ugly, and the future trends in real estate in South Africa and all around the world. So I'm going to start off with the ugly, because that's the nasty stuff that's actually happening out there, which is reality in the world out there. We cannot get away from it. It is reality. And we've spoken about it in depth. We spoke more about the South African economy this morning, but essentially the world is in a very bothered space right now. We have got an artificial world of so many things which are falling apart. And we just need to look at sort of what's happening in the Gaza Strip, in Syria, and all these different places which are having effects on world economies. today, the Scottish are voting to see whether they want to become an independent or not. So all these different things are going to impact markets and real estate markets. And I'm going to tell you a little bit about it. First of all, the nasty side, what is actually happening on the ugly side, but I'm not going to just leave it there, because we can either walk away from here completely and totally depressed, or we can walk away from here with something very specific that each and every one can actually take action on. And that is the objective that I want to achieve. Now, you've all got a magazine, and one of our major stories, we spend a lot of time on the psychology of investing. And one of the articles at the back is, happiness brings ROI. And too many people are so stuck in the mechanics of what's happening. They've got a certain way of operating, and I want to get you out of that. So, right, we looked at Robin Williams, and this is the late Robin Williams, okay? And what he says is, you will have bad times, but it will always wake you up to the good stuff you weren't paying attention to. Isn't that so true? We get into this world. We've got our inner world, which is our world, and we've got our outer world, where everything seems to be falling apart if you do watch a lot of television and consume a lot of newspapers, and then, of course, believe that it's all actually happening out there. So essentially, at the end of the day, I'm going to touch on a little bit more on that inner and outer world and how you can deal with it. So if we look what just happened in Lagos, Nigeria, a whole building collapse. Investments do go wrong. We heard this morning up to 80% of people that invest lose money. Why? Is it bad advice? What is it? Well, there's a number of reasons. I mean, some people, and I think it's a bit of a South African culture, what we do in this country, we like to be handheld with so-called qualified people who tell us where we must put our money. We are too scared to take our own decisions because there's lots of experts out there who are hands-off, who are not really hands-on. And it's time that we start taking responsibility for ourselves, that we take responsibility. So there's a lot that's going on in terms of what we can use so many examples of things that are falling apart. Look at the banking collapse of African Bank. 5.6 billion lost, gone out of the economy. And they're looking for a bailout. Now, in 2008, when Lehman Brothers crashed, okay, there was a US bailout. Now we've got a South African bailout. So there's huge problems out there. There's massive debt that has been put into the market, and some or other way it has to be accounted for at some particular stage. I can tell you from all the discussions here this morning, there's going to be an exceptional amount of write-offs, which we're not going to expect. And banking, per se, I think is in a very sort of troubled position. And I know there's a lot of bankers out there. If you understand the concept of securitization, what it really is your asset wrapped up with the individual investor in that particular investment that you're using at the end of the day. And I'm not doing it to scare, I'm not doing it to be anti-bank. It's not about that. It's about understanding what securitization is. It makes you think about, if you do decide to get a mortgage or get some kind of loan from the bank, that you actually start actually understanding what the concept is. What is behind a mortgage? Essentially, it is to pay the bank forever, as long as you can. Now, if you start using some of the methodologies that Dolph was talking about today, in terms of reversing that psychology, in fact, saying to the bank, well, let's reverse this whole thing the other way around. But there are other multiple options. So yes, so we start looking at what's happening here, and it's happened right in our own backyard with African Bank. So we look at what Benjamin Franklin said. And he's on the $100 note. He's on the $100 US bill. And he said this many years ago, many moons, and it still applies today. He said, credit is a system whereby a person who can't pay gets another person who can't pay to guarantee that he can pay. And that's what the system is built on. It's built on a whole bunch of promissory notes. Since 1970, when Richard Nixon took the dollar off the gold exchange, money became worthless. Cash in pocket is worthless. It is a bunch of promissory notes that's built up on a pile of debt that's sort of securitized on a whole lot of stock exchanges, what have you, as real money, disguised. And so this is the problem in the world today. We don't actually realize that once you start getting to understand the concept of what the money and the wealth, and we talk about the Fed Reserve, and we talk about the SA Reserve, I don't think they have any reserves. Because at the end of the day, we are the taxpayers, we are the people that's going to have to sustain those economies. We are the slaves. Get used to it. We are the slaves. So what we're going to start doing is start outperforming the market. We've got to be smarter. We've got to be doing better things. We've got to be taking better action. So litigation is on the increase. Now, in California and the United States, it is the #1 most litigious society in the world. I mean, you fall over in a shopping center and you get sued. But for the most minuscule thing, you get sued. You know which is the second biggest in the world? Anybody? Sydney, Australia. Same thing. Also American culture. Also type of thing where they start suing you. But I can tell you what, since 2008, since we got the world financial crisis, the global financial crisis, we found that litigation was the increase right here in South Africa. The majority of litigation that's happening in this country is via the banks. Now it's interesting, you walk through the bank's doors to get a loan, and then all of a sudden, you're passed on to an attorney which you don't know is a third-party interloper, which you don't know who they are, but they're suing you for money. And then all of a sudden, you've got to pay on the assets. And then we found in the South African courts, it's been proven time and time again, documents get lost. Money's been put into a special purpose vehicle, and it's been unsold. They've already profited from that up front. Now, I'm not telling that to scare you or to be anti-bank again. What I'm trying to do is you've got to understand. It's documented, it's there, it's out there in the market. I can tell you in 2011, in the South Gauteng High Court, 245,000 summonses were served. 245,000. People are saying, well, the only way to do it is to do it throw you with a legal piece of paper and try and squeeze money, as Benjamin Franklin says, which is not there. It ain't there. And we get into this whole society where we program, get a lawyer, do the thing, do the system, or what have you, and we lose that relationship that we have with money. The bad, what's happening out there? Well, this is a huge bugbear of mine, and it's the inequality in the wealth gap that we have in this country. And it's not getting better, it's getting worse, and it's a whole African problem. And there should be far more people looking at initiatives of affordable housing and trying to get our poverty-stricken people housed. Get them back into the market. That will help us on the top, instead of just the top layer trying to squeeze each other for nothing that is not there. We need some people, some leaders to step up properly and take action in terms of that. Yesterday there was an announcement, it was on the front cover of the Business Day, where there's an initiative for 3.1 billion in terms of housing in South Africa. There's a massive backlog. It's like 2 million houses or something. And let me tell you what, we feel it. Let me show you. Oops. Oops.
भैया छुट्टा नहीं है जो मैं दूंगा छुट्टा दूंगा नहीं है कार्ड है मेरे पास तो कार्ड लाओ तो मेरे पास मशीन है चेक कर दो दिखाओ कार्ड मशीन हां दिखा दो कार्ड का मशीन अरे मशीन है
Now tell me, how many of you people have been stuck at a traffic light and you don't actually have any cash on you? You have no money in your pocket. You have absolutely nothing. So the story of that, if you actually want to contribute, is that you've got a card. This is taken in India. Now, I can tell you, it's coming soon to Africa at a robot close to you, very soon. But, we can laugh about it. But, ladies and gents, it's a very, very serious issue. So, once again, we're still on the bad stuff. So we need to get over this thing. So does anybody recognize their property there? Yeah. Jeez, everybody said together. Wow. And Kandla, of course. I mean, who's paying for it? You are. You are. That's your best investment so far. So you talk about investing in real estate, that kind of stuff. So this is the kind of thing that's going on. And, coupled with that, we've got dysfunctional municipalities, we've got all these things which are happening out there. And somehow we just have to try and get control and find out ways. I've spoken about the debt. The debt issue is massive. Households are sitting there they're literally hanging on the edge of a cliff. I mean, 80% of their income goes towards debt. So you can imagine. And it's not improving in a hurry. So, we've got to find ways of dealing with this and how we can get this whole debt thing and becoming better investors and becoming more profitable in what we do and helping each other and helping the system that we can get out of this massive debt trap that we're in. I mean, the US government's still $17 trillion in debt. It's just over the top. It's unbelievable how large it is. And that kind of debt ain't going to disappear. So we've talked about, these conspiracy theories about implosion and all that different kind of stuff. But we've got to be aware of it when we're investing and when we do take on debt with a bank, for example. Because in 2008, you had a pulse, they gave you a loan. And it's changed, and a lot of people were highly geared, they were caught offside, and they're still paying the price today, still today. Now, also the other thing is in terms of due diligence. We've got to become very selective. And I found that that's what's happened with a lot of investors out there, is that they tend to get the wrong property in the wrong place. Now, Dolph mentioned it this morning. It's about, doesn't matter where you are, in the world. In fact, Tuesday in Johannesburg, we had Amelia Beatty, and Amelia is with Stanley, which is a massive asset management company. And they're launching into Africa, but they walk the streets. They're trying to find the deals, but the right deal. And we tend to think every single piece of real estate is an investment. No, it's not. It's not, because we don't actually know how to do the numbers. And that's what I have found from all my experiences with all the people that I have. There's massive lessons to be learned. There's not a silver bullet for anything, but we've got to go to those hard yards and learn them ourselves and make sure that we don't actually do that again. So, and we've got to look at the trends. There's medical facilities, and if you look in America, it's going to be relevant because they've got an aging population. But if you look in Africa, we've got a very young population, so we need to serve that, and it's completely underserved. So, having said all those things there, all those horrible things that we heard, there is some good out there, ladies and gents, I'm very, very pleased to say. The first thing is the rising of Africa. Now, I can tell you that the 7 top countries performing in the world today from a GDP perspective come from Africa. The likes of Ghana, the likes of Ethiopia, the likes of Angola, the likes of Kenya, the likes of Mozambique, and plus a couple of others. They are performing. Africa is completely and totally underserved. We need to find ways of how we can get into Africa from a retail perspective. There's massive opportunities there. Banking, there's huge opportunity. Telecommunications, roads, all that kind of stuff. They need structural things. So Africa has a massive opportunity, but as we know, it comes with massive risk. And it's those people that are prepared to walk that path, on that risk path, that tend to get those results. So it's some places where some people say, I don't want to go there. Look what happened in Nigeria. Look at Ebola. Look at all these things that are all around here. They're all affecting the way that we make decisions and whether we should go or not. I don't want to get Ebola. I don't want to, I don't want to be affected. So, that could impact on your wealth. So those kind of decisions that you make could impact. Now, the other good story, and I don't know whether it's good, because if you are an estate agent, you would think that there's a property boom out there right now. I can tell you, last week I spoke to Pam Golding. They said in the Atlantic seaboard, they've grown year on year 150%. 150%. Okay, they've had a very lean period over the last 6-7 years since the crash. But what's driving the market? And I asked that question. I said to Andrew, what is actually driving the market? And he said, well, it's a combination of things. There's obviously overseas investors coming from America and from the UK and Germany and Portugal and even Africa, particularly in the Atlantic seaboard. There's no stock. They don't have any stock. And they're all investing in real estate. Some people, South Africans, who have made a good buck on the stock exchange, taken their money, they decided to put it back into where? Real estate. So, finds that stock market investors also like real estate as well. So, and it's not necessary, and I think this is a false economy that's been created, because there seems to be a little bit of an uptick, but there's one caveat, and the majority of these deals are all cash. very little bank lending, particularly in the top end. So that's what we've got to be. There's very little banks which are backing the people out there. So I want to bring that point. And for some other reason, the estate agents have got a perception that the market is going crazy, that all of a sudden it's back to 05, 06 when things were going exceptionally well. And I don't think so. And I know that Erwin has got a view on that, and a very, very powerful view, and something that we will listen to a little bit later. There's also action in the lower markets. In Johannesburg, there's Hyde Park. It's also going through the roof, up 70% in Mhlanga, in KZN. So all those areas, there's a massive uptick. But it's all in the 4 million sort of plus market. Now, green. Green is a massive thing that's impacted the market. Now, green is no longer a tree-hugging concept. Everybody's just saying, no, but it's expensive to go green, it's this and it's that and all that kind of stuff. I can tell you what, ladies and gentlemen, green is part of our lifestyles. From the way that we live our life every single day, it's going to impact us. Just last week at the Green Building Council, they've announced a whole lot of initiatives for residential properties. They've launched a new software tool called Edge, which can manage the way that you actually consume electricity. Now, isn't electricity here? It's a massive problem. Eskom have got another 50 billion bailout from the government. Another 50 billion. Now, if we don't address that, the energy issue ourselves, and we start saving, and I mean, I bet you, some of you out there are the people that, if you're making a cup of coffee of yourself, you fill up the kettle. How many people do that? And you're only making it for yourself. And you just think it's something so small. Then, of course, your rubble, how you separate your rubble. And, how everything goes to landfill. And all you're doing is, from all the fast foods and all that kind of stuff, I'd like to go to the fast food guys like McDonald's and what have you. The savings, if they had to serve food on a plate, would be astronomical, because all of those packaging stuff goes into landfill. And somebody has to do about it. In terms of the commercial market, it's already, it's a million square meters has already been approved for green here in South Africa. They tend to be new buildings. There are some retrofits, in other words, some existing buildings that have been refitted, but it's here to stay. Now, what that's going to mean for investors is that they're going to get lower vacancy rates. There's definitely going to be savings for the tenants. And of course, at the moment, tenants are struggling. They're struggling out there in the office market. They really are. So we need to find initiatives, and investors, owners, fund managers must take control of this particular and be aware of this green thing and really take it seriously. Okay, so we know that the global stage is our new playground. It's no longer just about South Africa. And, we just have to look at Wealth Migrate as an example, but we just have to look at what's going on in the stock market. If you look at the top 10 stocks on the JSE, you'd find that the majority of those stocks are all invested not here in South Africa. Definitely not. It's all offshore. So all the income is coming offshore. I'm going to use some examples just now of ones that are performing absolutely exceptionally. But you know what they did? They did that 10 years ago already. Do you think they did it last year? Last week? No. This is a long-term game. And this is where we're going to start thinking in terms of long-term. So the global stage is our new playground. We've got new concepts for investing in residential real estate without using the bank, called rent to buy. So there are all these wonderful ways and means that you can actually invest in real estate without using the bank. And once again, it's using that creativity of yours. We tend to get, I've got a property, I can't get finance, I need to get a loan, that kind of thing. I need to get a mortgage. Now, we've got new things that like crowdfunding have come on board. So there's a whole lot of different new things that have come into the market, of which rent to buy is also going to impact the real estate market. So I would say crowdfunding, and I would say also rent to buy. The digital age is here. Now, my background is actually in a media company. In fact, as the fly crows there, I'm going to touch a little bit about it, Naspers, they have transformed into an absolutely complete, total digital company. When I was at that company, they had major print titles like Report newspaper, they had Die Burger and Bild and Huisgenoot and You and Drum and Sari and Women's Valley and all those wonderful magazines which brought in 30% of the income, while DSTV brought in most of the rest. They've now gone into 52 countries. And they already did that when Chris Becker came on board. 93% of their income comes from offshore. 93. And all that 93, it's all digital. Everything, it's digital. They've transformed that business from the grey suit brigade into a digital business that is global. Okay, I'm going to touch on a little bit about that because there are people which are making massive difference who are South African offshore, and I want you to start thinking about. We've spoken about crowdfunding, and I really do think this is going to impact the market. I'm not going to talk too much about it because Scott will do that. I really think that crowdfunding is going to impact. The success of a lot of these international guys at the moment is astronomical. The fundraising that they're doing, and at the cost of what they're doing in terms of the fundraising. So if you had to decide between different vehicles, different funds, and what have you, and you looked at the economies of scale, you're going to see crowdfunding is definitely going to come out tops. The other trend that's impacting us is the rise of China and India. We've heard about that all the time. But you know what's also a very interesting statistic? You know which country is going to have the biggest population in 2030? Anybody hazard a guess? Anybody? India. There are more babies being born per hour in India than anywhere in the world. And by 2030, they're going to be the biggest population on this planet. 2 billion babies. Whew, I think that's just in Africa. I think it's even more than in India. I think it's double that. It's an incredible astronomical number. We've got to be able to see the shift in demographics and what's happening in the world. Who's going to look after them? You know, this planet of ours where we've got green and all that, if you don't do it, it's got to become a mindset. If we don't invest properly, we don't put proper facilities, don't have proper roads, don't have proper buildings, we're going to implode, we're going to fall apart. So we really have to start thinking of what's happening globally and also as investors where we can get opportunities in those different markets. These are the different companies up here. Now, the number one company, if you talk about technology in the world, is Google. It's followed by Amazon and then eBay. And you notice there's a new one on top there. It's called Tencent. Do you know that Tencent is the 4th biggest technology company in the world? They're a $150 billion US company. They surpassed Facebook in April 2012 and they're bigger than Facebook. But you know what the real difference is? You know who's investing in them? We're the Clove Friars, South Africa. They did it 12 years ago. Naspers owns about 40%, and that's why they could deliver to their shareholders this kind of thing. They're growing at an astronomical rate, and so is technology. Technology is moving in a direction. If you don't embrace technology, I'm going to tell you, ladies and gentlemen, today, you're going to die. And as Chris Becker said, the chairman of Naspers, he says, if you can't beat them, join them. All the new technology in the world is getting created by people that are under 30 years old. So fact, what's going to be the next Google? What's going to be the next Twitter? The next Facebook? We don't know. But what we have to do is the existing technology that is out there, we're going to have to use it to our best effect. Because if we don't, we're going to be in trouble. Can anybody tell me, in gamification, it's also a massive growing industry. Can anybody tell me who are the consumers of that? Anybody? Hazard a guess. It's actually women 40 years plus. Women 40 years plus who are Candy Crush, and all the games that you get. So now what you're starting to do is, if you want to start targeting a specific demographic, and you want to reach those particular females, 40 plus, you better, come up with some kind of gaming app. So the way that you reach them is really to engage them and to talk to them and to get them involved with you. It's changed. So what I'm going to do in closing, I'm going to give you 5 ways to capitalize on the trends. Because we've spoken about all these things. We've spoken about the ugly, we've spoken about the bad and the good. So I want to give you some sort of practical things. And I alluded to this earlier on. The control of your mindset is just so important. The habits that you do, that you get up every single day in a certain way, out the same side of the bed, and that kind of stuff, and you switch on the TV and you see a building has collapsed in Lagos, Nigeria, and the world is falling apart, and economies are suffering. There's war on the Gaza and Syria, North Korea has attacked South Korea. All these different kind of things are possibilities that we could wake up on any particular morning. But it's so important to control your inner world and how we react to that. Because what's happening out in that world, we tend to immediately affect our inner world. Because if we consume enough bad media, it's going to have an effect on our inner world. And it's so important that we're in the right headspace from an inner world perspective all the time to make the right decisions, all the different things that we need to make on a day-to-day basis in our business. So I just want to talk about all these things and try and get that message across, that it's so important. Now, in the magazine Real Estate Investor, right at the back, happiness increases ROI. They've actually given some ideas how you can do that and the things you can actually apply. So I'm suggesting that have a look, and it's so important. The next thing, we've spoken about the emergence of the smart consumer. We need to recognize it. If you can't beat them, join them. Find a way. Find a way that you can get your message out there. I know some people say, I hate technology. I don't want to use technology. I'm not interested in Twitter. I don't want to go on Facebook. You don't have to. But just find one technology. Find one thing. Just one thing and try it. And use it for your business, for your own effect, to advance your business, to advance yourself, to make a difference out there. The next thing is in success and failure. I mean, there's so many people out there that are saying they're multimillionaires, they've made so much money and what have you. So, well, what did you learn from that? And in many cases, you learn nothing. You learn more from your failures. And I can tell you that when World War II, in fact, it was when Japan bombed Pearl Harbor. The day that Japan bombed Pearl Harbor, Warren Buffett bought stocks on the New York Stock Exchange. Now, isn't that counter-cyclical in terms of a mindset? When there's absolute failure out there, there's massive opportunity. And we just have to get our mind across that in terms of that. Now, this morning, it is always depressing to listen to the reality of it. And it's a fact. We cannot take away. We cannot take away the fact that there is all these things happening out there. But it's so important how we respond to it. And that's really, we don't react. I mean, let's say we're going to run and whatever we're going to do, we're going to go to back for Perth or whatever it may be. That doesn't apply anymore because there's a lot of unrest all around the world. The other thing is, and I know it's quite a daunting concept for a lot of people, but it's specifically in Africa and China, and if you're going into the Eastern market, you're going to have to start collaborating with governments. And, governments do have a lot of power. Yes, I know a lot of them are not sending out good signals out there at the moment, but it's going to become, if you want to expand and grow your business, we're going to have to start working with them to find ways and means. So if we want to do an affordable housing project of some kind, we're going to have to get some of the housing departments involved at some other particular stage. We cannot do it without them. We just have to. So we've got to find ways of learning the culture, of engaging with them, interacting with them, and making a difference. And yes, there's knowledge out there. There's so much knowledge. And it's all available for free online. And yet so many people tend to take their broker or this one and that one. I'm an expert. I've been in this business for 20 years. So show me your results. Show me what you've done. And there's a lot of savvy investors out there and a lot of people losing money. But there's, and we've got to kind of get that fine line about taking responsibility for ourselves. Because as soon as somebody else takes a decision on you, you're not responsible. You're not accountable. This is Chris Becker. I mean, he's the guy that's initiated. I'm giving some examples of South Africans. South Africans who have made a massive difference in this world. And he's one of, the fact that he's created so much value back into South Africa by timing the market, not only for his shareholders, but it's come back into South Africa. It's less than a kilometer away over here, Naspers headquarters. And what he's done is nothing short of absolutely astronomical. Tencent is growing, and I can tell you what, it's going to be bigger than Google in 10 years' time. I can tell you Tencent is going to be huge. And it's a South African company that's backing it, not an American, and also with the Chinese, of course. They're very clever at using the local knowledge. And Scott has talked a lot about using the partners when you go into a new country for real estate. And if that is true, it's exactly the same for business. Exactly the same. Then we've got Mark Shuttleworth. And he doesn't need much introduction. But the things that he's done into space and that kind of thing and the initiatives that he's done, even though he's left the country. And Elon Musk. And he has a dream to get to Mars. And the things that he's done with Tesla and the speed train and everything that he's done is nothing short. And these are South Africans. They're South African guys that are making an impact in the world, on the global stage. And, and we don't say we have to be those people. We don't have to be a Chris Becker or Elon Musk or whatever. All of them are multi-billionaires. Not millionaires, billionaires, all of them. And it's just because what they're doing and what they identify a trend and they run with it. And they run really hard. Here's a guy, Sia Zuza. Clem Santa talks about this guy a hell of a lot. Now, Sia Zuza is quite nothing short of astronomical. He got brought up in Mthatha, in East London. He had nothing. He had a dream that he wanted to go to Jupiter. He lived in a township in a shack. And he started working and experimenting with chemicals and blew up a few times. And eventually, he managed to make rocket fuel. And he entered in a local science fair and he won it. He then entered into an international engineering and science fair in Albuquerque, America, with 1,500 entries of 52 countries. And guess what? He won. He then got offered a Harvard graduate scholarship. Here's a guy who's had nothing, came from a background and he just had a dream. His dream was, I want to go to Jupiter. So this is the big thing. So, Nelson Mandela, and, this is not the country that he would have wanted that we see it right now. And this whole education thing that we've got, he's our inspiration. He's my inspiration. And he says there, education is the most powerful weapon which you can use to change the world. Now, I'm not saying we're all going to have to go back to school and university and all these different things. You don't have to do that. Because some people, I'm too old for that and whatever. But, there's these kind of events that you can pick up that information. There's people out there that can help you to take you to the next level, who have achieved that kind of success. And it can give you that inspiration, that dream of what you would like to achieve, like Sia Zuza did. He got offered a Harvard graduate scholarship. He then got offered a job with NASA. He turned it down. You know why? He said he wants to build a business in South Africa. Isn't that an astronomical decision for somebody who's achieved just so much in this world? So, in closing, I want to ask you, what is your dream? In your particular business, what is it that you're trying to achieve? And, I just want you to think a little bit about that. It doesn't matter what you're doing, whether you're working for a company or whatever, what kind of initiative can you make to make a real difference in the world, given that I've just given that whole scenario of what's actually happening in the world? Because it takes people like yourselves to step up to the plate and to be able to take those decisions like a Sia Zuza did, like a Chris Becker did, like an Elon Musk, all the normal people. Mark Shuttleworth. They all found their invention, they found their little dream, and they started. So whatever it is, I just want to encourage you to find your dream. On that note, thank you very much.
Thanks very much, Neil. We've seen the listed space grow and grow and grow. The Des De Beers, the Norman Sassers, the Mark Wainers haven't done too badly out of it. But it was a sector that used to have less than 10 counters. I can think of about 4, Tambuati, Capital, old Mark Prop, all of back in those days. We've seen this sector grow, and most of the new listings that have come through to the market have come through in the real estate sector. So there's some financial alchemy that goes along with that. I have an alchemist next to me, Jacques Manoli. Is that Mignolo? Magliolo.
Yeah.
All right. I want to hear you say Kuraon and Dakasha Francis Chota properly. Jacques is with BCI. He is he'll explain to you, and you can read his profile in there, but listen carefully and watch the mathematics. And if there are any CAs in the room, I'm going to want to sit at the table with you guys at lunch, because how he explains it and how he talks to it, I hear him, but surely. So without further ado, I hand over to Jacques, and he is Sicilian, by the way.
Thank you for having me. Oh, what is that? Yeah, that's all. Right. Hey. Can you hear me now? All right. Okay. Following Neil's presentation, he said to me, introduce yourself and make sure that everyone knows who you are, because you don't look like a stockbroker. There we are. Thank you. Do you want to sort out the slides? Hold on.
It's going into presentation mode.
Yeah, just need to view. Can you make it one page, please?
In my contracts, I always have to have the IT guy there.
One page. Okay, while we're waiting, let me explain. I am the CEO of Business Consultants International. It's a research and strategy house. I've been a stockbroker since 1990. I've completed dozens of projects on listings companies. I'm also an associate to, I'm also the CEO of eVista, BCI Venture Capital. I sit on the board of Anglo Special Projects. We got it? And I'm an associate to Arbor Capital, Merchant Tech Capital. I sit on Coltech's board to do all their economic analysis of chemical products. I've listed dozens of companies. I've written 12 financial books. The ones in red are university textbooks. All right. Today I want to talk about listing properties and property company. But before I do that, all this experience, all of it that I have had since 1990, has identified two basic factors. The first one is that stockbrokers complicate things to the extreme. And the second one is that successful entrepreneurs are ones with an inner strength that will never stop them doing anything. My strength is identifying those entrepreneurs who have that inner strength. All right, first one, how do we list the company on the exchange? And stockbrokers will tell you it's a 2-year process, blah, blah, blah. It's really, really very simple. All they're trying to do is obtain enough research to identify what investor sentiment will be towards your company, and if they take your earnings per share, multiply it by a fair ratio, which is your investor sentiment, you get a share price. It's as simple as that. What they try and do, I'm not very creative. I'm a stockbroker. Right. All right. What they're trying to identify is two things. Firstly, research, and that research identifies what investor sentiment will be towards your company. And secondly, and in all honesty, the real aim is how much they're going to get paid out of the process of listing your company. So, which reminds me of a story 2 years ago. This American entrepreneur asked me that very question. He said, if I give over my business to you to list, can you do the research? So I said, well, I've been doing it since 1990. So he said, oh, by the way, we can only pay you at risk. So I said to him, I'm Sicilian, payment is never a risk. He paid up front. Right, so we're going to concentrate on just two things today because I've only got half an hour, I could talk all day. How we list and why should we list. How we list, this is the process. First, the stockbroker will say, okay, we need to do research, global research. Let's identify international best practice so that when we do due diligence on your company, we take it apart, bit by bit, and we rebuild your company based on international best practice. And we start with a shareholding, we go into the board of directors. Do you meet King 3? Do you have, when your company's at King 3, do you meet all the requirements of having a proper structured board? Do you have all the subcommittees, audit committees, the audit committee, the remuneration committee, and communication committee? Do you have any of those? 90% of entrepreneurs don't even know what King 3 is. So what we do is we do due diligence, research. We then put the company together through a set of workshops that identify operational and financial strategies. And again, the whole idea is to be able to draft the business plan for AltX because AltX requires it as part of Schedule 21 of the Listing Requirements Act. So you have a business plan that fulfills all the criteria of King 3 New Companies Act and Schedule. And that is to enable the AltX committee to say, based on your business plan, you may list without conditions, whatever they decide. The only way you can do that and get a yes within the first hour after presenting to the AltX committee is to enable to persuade the committee that your financial forecasts are based on a set of assumptions which are qualified by research. It's as simple as that. Now, let's look at why we would list. Why would you list? It's a simple matter. Tons of cash. That's why you would list. Your fair value, and I'll take you through some basic calculations. Why you would list. Stockbrokers say a simple thing. You list a company to multiply that investor sentiment towards your company. A private company has very little investor sentiment. Nobody knows you, or very few people know you. When you become part of the market, whether on AltX main board, international exchanges, doesn't really matter. You suddenly become the focus of the international community. And suddenly your investors are multiple, hundreds of thousands, people all around the world, and the value of your company increases. Before I get into the calculations, I've been asked the question in Joburg, surely there must be a reason why you would list under these market conditions. And you think about the market reaching new highs almost every week. Why would you list now? Two reasons. The first is that international funds flowing into the JSE have increased from last year's 1 billion rand per day to over 2 billion rand today, per day. So you have to ask yourself, where's this money coming from? And is it important that these funds are coming into South Africa? Well, if you break down that 2 billion rand per day trading, or value of trades on the JSE, and you'll find that only 30% is local trade. 70% of that money is coming from international markets. And again, why should they be focusing on South Africa? Well, because international fund managers who control $1 trillion of funds around the world, $1 trillion in emerging markets, let me qualify that, in emerging markets. In 1997, followed by the 2008-2009 market disasters, decided that in their wisdom, they had 80% of those funds, of $1 trillion, based in Asia and South America. And after this market disaster, they decided to restructure that. and plays only 50% in South America and Asia, and then the remainder 50% in former Eastern Bloc countries and Africa. You have to ask yourself what's happening in former Eastern Bloc countries. Disaster, you have Russia's sanctions against the country, etc., etc. In Africa, you have Egypt, Libya, disasters, Nigeria, another disaster. And so there are few countries for these international fund investors to invest in. Remember, there's 30% of $1 trillion coming into South Africa. Our markets will continue to rise. That's the first reason. And the second reason is entrepreneurs tend to look at the economy to determine where the JSE is going. It's actually the other way around. The JSE is the leading indicator of where the economy is going. And if the JSE keeps rising and rising and rising, there will be a time when it will correct. Stockbrokers never use the word crash, ever. Because in 1987, it took 2 years for the market to recoup after the crash. In 1997, it took 3 months. 2008, 2009, it took less than 3 weeks. So the market's correct. Listing your business today will get you the highest value possible. And we take this example. Take a simple example of a property owner who has 1,000 square meters. So occupational rent is 80%. The property is 80% occupied. It charges 500 rand square meter. And the building price is 1,000 rand per square meter. That's right. Before we get to the calculations, these are the statistics that stockbrokers use when looking at property companies. These are 7-year averages. And you look at this, and this is standard. All brokers will use it, and they'll say, do you fit within this profile? Again, stockbrokers are very narrow-minded. They don't look outside the box. So they say, if your net profit margin is 28%, your rental rate is 37%, and your cash flow per share is 1%. That means, cash flow per share means for every rand that the company achieves in cash flow equals to 1 rand in share price. Right. So now we start with the absolute basics, and you look at this and you say, okay, so you want to sell your building today, and it is 0 occupied. What would you get for it? Well, it's simple. 1,000 square meters, 1,000 rand. Company's worth 1 million rand, right? Simple. Nobody would want to sell their building today at 1 million rand, even that kind of small building. But we take it further and we say, well, what happens if you're willing to wait 1 year? And remember, 30% occupational rate, according to the stockbrokers. I'm saying, well, let's look at 80%. 80%, 500, years 1, 28% net profit percentage to turnover or to rental gives you 1.3 million rand value. Now, stockbrokers look at it 2.5 times PE. So that's it. You've got 1 million rand value plus your rental gives you a 2.3 million rand value of the building today, after 1 year. So you've gone from simply 1 million rand value of the building to 2.3 million. Stockbrokers are not interested in that. I mean, who cares if you have occupational rent for 1 year? They want to look at the long-term picture. So what they say, if we do a 12-year, this is value based on earnings, discounted cash flow over 12 years, what they're really doing is this, to put it bluntly. They're saying, we will own shares in your property company, not really care about you right now, just what we're going to earn out of this. If we look at a 12-year picture, what is the company going to be worth? Even though we're not going to pay you that. Because we're only going to look at 2 years, 3 years, 4 years maybe. Certainly not 12 years. So if you look at this 12 years, this is the value of the company. Same company. Therefore, profit, 60 million rand after 12 years. You've looked at the fair value on a 2.5 times P ratio. In other words, they're saying this value over 12 years multiplied by a simple 2.5 times PE, price earnings ratio, gives you a value of 40 million. This is behind the scenes calculations. Entrepreneurs don't get to see this. Because what they do is this. You should be so lucky to get 40 million. Right. We look at a 2.5 times PE, gives you that same value, times 3 years, times the value of the price earnings, gives you 6.7 million. So that's what the entrepreneur gets to know. He says, my company's worth, my property's worth 1 million rand. If I don't list and I sell it as an unlisted company, this is the value. 6.7 million. The broker, the stockbroker says 2.5 times P ratio is pretty much the standard ratio for an unlisted company. We can push that up multiple times if we list your business. So how do stockbrokers determine a share price? There are 3 ways: auction, book building, and fixed price. These are the 3 ways that stockbrokers around the world determine a fair share price. Remember, share price equals a fair price earnings ratio multiplied by your earnings per share. It's a simple ratio. The higher the P ratio, your earnings per share doesn't change. The higher the P ratio, the higher the share price, right? Simple calculation. What happens with auction is that the stockbroker will take your business, he's created or formulated a prospectus, he sends it out to the institutions, to the retail brokers, and he says, auction the share price. By a certain date, we will have the highest price and the lowest price combined together to get a middle price, which will be the listing price, right? They take the lowest and the highest, merge it, get an average, that will be your price. Book building is they will send out the prospectus and they will take a cross range of share prices. I'll say, well, if you build this book to achieve Schedule 21, which states that 10% of your shares has to be placed in the hands of 100 shareholders, Alt X regulations, then you need to have a share price. Book building simply enables you to quantify and assess market sentiment towards your company. Fixed price is when they say, who cares what the market thinks? We'll put it at a fixed price. So using those ratios, I know this is difficult to see, but I'll take you through it quite quickly. Using the ratios as that first page, what happens is this. They say 17.98 or 18 times PE is the market ratio. The total market of the JSE, that's the P ratio. Remember, 2.5 times PE equals an unlisted company. Now, the market's 18 times, property's on 15 times. So let's get a median between the two, and you end up with an average PE of 8.1 times, a minimum value of 12 million, maximum value of 18 million on 15 times. And my question is, which would you choose? Today's value, R1 million, 1 year's earnings, 2.3 million. Wait for an unlisted 2-year view, 6.7. List the company now, 18 million. Remember, the value without being told to the entrepreneur is 40 million. Same company. The question is, which would you choose? I can tell you, and as a parting note, I've been asked repeatedly, well, there are so many property companies listed. Why would you list another one? It reminds me of a communist friend of mine, and that sounds strange. His name's Don, and he says to me, I asked him, Don, you've been a communist all your life. What would you want? If I can give you anything today, what would you want? And he said, a Mercedes-Benz. So I said, well, Don, communism is about the people, not you. So I said, well, I'd want everybody to have Mercedes-Benz. So, well, how are you going to achieve that? And he says, one at a time. So I said, oh, the starting point of one at a time is you. He says, now you get it. That's how you list properties, one at a time. Thank you. Any questions? I have 4 copies of my Alt X book. Anyone want?
I'm going to ask you to do 2 on each side, sir.
2 on each side.
Because the guys on the left here, they, giving it to a left winger, I mean, really.
I'm a rightist, so...
Thank you very much, Jacques.
Sorry.
Thank you. Yeah, there's been financial alchemy in this space. shirt there, boss. Okay. Rightio. Our next speaker is a young man who spent a fair bit of travel around the world, jumps on a plane, sees stuff, finds partners, and expands his mind. He's with energy and diligence going to expand your mind. It's a pleasure to welcome up a friend and a brother from the same mother. Our folks have got a lot of explaining to do. A brother from the same mother, Scott Picken. Welcome, Scott.
Thanks for that intro. So, you can hear me now. So we started off this morning and I spoke a lot about children and happiness and engagement. So I'm not going to go into those details. But if I do ask you, I've got a 2.5-year-old son, and what is the number one word that comes out of their mouth most often? What do they ask? Why? Why? That is the number one word that I hear all the time at the moment. So in the spirit of children and the spirit of learning, can I please ask you if I can take my jacket off and have some fun with you? Why? Well, to be fair, it's a very good response. And the answer, the reason that we need to start with the why is that in life, if we don't understand the why, nothing else makes sense. So today, I plan on only trying to achieve 3 things. The very first one is to answer the why. The second one is to answer the how. And then when you finally know what's happening, I'll share with you the what. So if we get started, and I explain to you a little bit about the why, from my personal perspective, why do we do what we do? Well, the first reason is that Nelson Mandela said money won't create success, the freedom to make it will. I had a personal experience at a young age. My father was financial director of a big company here in South Africa, and at the age of 17, he wanted to go on his own. It was 1995. And my father was paid out early retirement. He got about 500,000 Rand, and he went to see one of those very esteemed and clever financial planners, and he put that money into the market, and unfortunately 10 years later my father passed away. And my mother was paid out 480,000 Rand. It's a hell of a good performance, and I guarantee you that that person earned fees all the way through the process. So I sat with my mother, and I said to her, if you'd literally bought houses in 1995, January 1995, the average house price was 166,000 Rand, according to the Absa Housing Index. If she had bought 5 of them, she would have had a loan-to-value of 40%, and now, 10 years later, she would have been earning 107,000 Rand a year net. Now, when I say net, I don't mean trying to be a manager. She would have a net asset value of 2.7 million. Now, again, Dolph spoke about average properties. I'm just talking average properties. It's a little bit better than 480,000 Rand. Last year when I did the calculation, she'd be in year 19 now, she'd be earning 2 million Rand per year, and the value would be 5.35 million. Just in simple numbers. I had another person that was very close and dear to me, and that's my uncle. My uncle decided to go on a different strategy. He decided to empower himself, nothing to do with property, all in the stock market. He followed his passion, but the one thing that he did, he was living in Zimbabwe, and at the age of 30, he decided he wanted to put some of his money overseas. So when he earned some money locally, he put some of it overseas. In 2003, he decided it was better to move to Brisbane for his family. Now, anyone that knows or has tried, at the age of 53 to get into Australia is pretty difficult, yes or no? Well, he bought his way in. He bought a house for $1.8 million Aussie cash. He sent his kid to a private school, and I believe his greatest accolade is that he retired and didn't have to work for an Australian. So why do we do what we do? Myself and the rest of our team are passionate about helping people and giving people the freedom so that they can choose to do whatever they want with their lives. Where they want to live, where they want their kids to go to school or university, or where they want to go on holiday, doesn't bother me at all. What charity they want to donate their money to. All that I do care about is people having the freedom to be able to do it. And hopefully today we're going to share with you some of the why in terms of how you do it. I embarked at a very young age, a bit like Dr. DeRoos. I enjoy real estate. That was my very first project when I was 13. It's amazing the self-belief parents can give you, because I believe I did the whole thing myself, but I'm sure there were a few others involved. But we extended my bedroom, or we put a double bedroom on with a shower onto our house. At 22, we did our first project. It was actually here in Cape Town in Rondebosch. We bought a house, knocked it down, and sold 6 townhouses. At 24, we did our first property in London. We actually very much accolade to Dr. DeRoos. I can see he's in the back of the room. But I read his book, Real Estate Riches, when I was 19. And the number one thing I learned from that, if you can create value for a property, stop worrying about what everyone else is talking about in the market. By putting that little conservatory on, we managed to turn that property from a 3-bedroom into a 5-bedroom and have earned over £1,000 passive every single month since 2002. And it was just after September 11th when all my friends told me that the market was going to crash. Interestingly enough, those same people started buying properties in 2007. I decided that I wouldn't make a very good employee, and so we started our company when I was 26. We've helped thousands of South Africans invest in South African investments, hundreds in London, hundreds in Australia, and now hundreds in America as well. And the one thing a lot of people say to me is a lot of it's residential. Yes, we did start in residential. We just closed on this portfolio in Atlanta. It was a $16 million deal. And it's quite interesting if you want to understand the power of what we're going to talk about. That money was raised on 5 different continents. And I'll explain a little bit more now. So for me, property is not just about the direct investment. What I've always been passionate about is how can we come together and how can we benefit together? Because anyone understands that the man who arrives with 10 million or 100 million is a lot more powerful than the man that arrives with 1 million. Am I right or wrong? So I did a dissertation. I went to UCT. I did a dissertation at honours level and at master's level in London on how IT could revolutionize the property industry. My synopsis was to take an old industry and to redefine it through the use of web technology to increase global reach, partnerships, and efficiencies of scale, so as to provide a one-stop, enhanced, and personalized service. Now, I know that in 2014, that's fairly obvious. But in 1998, 16 years ago, that was a little bit ahead of its time. And for 16 years, we followed a passion to be able to provide good properties to all people. And most importantly, to manage their risk. And finally, after 16 years of being told it's not going to happen, I'm very excited to say it is happening. There's a tsunami of change that is sweeping across the world, and most people don't even know that it's happening. There are 3 disruptive forces that are all colliding at one time. The first force is the transformational power of technology. What do I mean by that? If you just take the internet, it has provided the backbone for a company like Amazon to exist. You used to have to walk down the road to go to a bookstore. Now you can literally buy that same book on Amazon. It provides the platform. The second one is the adoption of technology. So when you talk about the internet or your cell phone, we all started out trying to find a date online. Then we wanted to share information online, emails. Then we started buying aeroplanes online, airplane tickets. And finally, some of us started using internet banking. That was a major, major step, one my mother has still not figured out. She's a bit worried she's going to have her money stolen. But the final step is where we start to invest online. And in the same way that we trust our friends on Facebook and we trust our colleagues on LinkedIn, we might start to trust the data that we get online more than the individual that can sit across the desk and show us pretty graphs. And the third major change, and Dr. de Roos referred to it, is the regulatory change. A lot of people think that when the Jobs Act changed on the 30th of September last year in America, that the crowdfunding had now started, and specifically equity crowdfunding. There were 10 other countries that already had it in place. There is a complete reversal in the way that private capital is now being distilled around the world. And interestingly enough, myself and my partner Brendan were interviewed by a banking consortium yesterday. And they said, what do you think about the regulatory environment? If you'd asked me 12 months ago, I thought that we were going to have to change the world through the likes of an Arab Spring. It's going to happen, I guarantee it, but I thought it would have to be more of a revolution type style. And it's actually been the complete opposite. Around the world, governments are actively mobilizing as fast as they possibly can to put the infrastructure and the regulations in place to allow private capital to be invested in their countries. Because they understand that it drives business, it creates entrepreneurship, it creates opportunities, it empowers people, and it creates wealth. And why would you not want that in your country? So the big idea is crowdfunding. And a lot of people think that crowdfunding is the super branded new technology that no one's ever heard of, and how, what's the catch? How am I going to lose my money? Well, actually, it's a very old idea. In South Africa, we've got the Stokvels. There's 80,000 of them. And do you know that just last year, 1.2 billion US dollars was actually invested in a Stokvel in South Africa? We all know about the synagogue. What a lot of you might not know about, and I apologize for the pronunciation because I can't speak Mandarin, there's Biwei or Baiwei, I've got no idea how to say it, which is an old female tradition in China, very similar to our Stokvel. This has been going on for centuries. The only thing that crowdfunding is doing differently is it's adding technology to the process. But there's three things that are exactly the same. The first one is trust. So in the 20th century, we all tried to do business, and it was all about me. It was all about my corporation, how much money I could make, how much profits I could make, and in many instances, how well could I do a deal over the guy next to me. There was no trust. But on the internet, who here has bought or sold something on eBay? Dr. de Roos referred to it earlier. eBay, bid or buy. Yeah? Some of you in the room. So in 2003, I love rugby. I've been to every Rugby World Cup final since the competition became the real competition and we were allowed to play in '95. And in 2003, I lost £13,000 buying tickets on eBay for the Australian World Cup. And so I figured out, hang on, I better learn how to use the system pretty quickly. And in simple terms, on eBay, if you go and buy tickets, what most people don't know is that this part over here on the right is the most important. Because in the past, I know Michael. Michael's a friend. In the past, Michael might phone me up and say, listen, Scott, I got 2 tickets to the rugby. They're $1,000 each. I'll be cool, no problem. I'll just EFT you the money. When I see you can give me the tickets. Right or wrong? Yes? But what eBay allows you to do is that I've never met 7104 Leslie. But this person has done 974 transactions and they have 100% positive feedback. Their social proofing, which Dr. de Roos referred to, is far more important to them than one deal and trying to get one over you. So just as a matter of interest, while Neil and Jacques were talking, I was buying 12 tickets to the Springbok All Black game on the halfway line at Ellis Park on the 4th of October. Doing exactly this. And the bottom line is, I've never met the person. His name is Martin. I've just transferred 18,000 Rand into his bank account, and he's going to drop the tickets off at 2:30 this afternoon. That is social proofing. Someone at the back of the room said, you hope. I have more trust in Martin dropping off those tickets than going to see a bookie or a ticket tart or whatever you want to call it. Because Martin has been doing it since 2012, and I'm not using my computer. If I was, I would actually be able to show you how I found the tickets and how I can trust the person. But what are the ramifications? Buying tickets, that's small fry. What about Martin? How does he know I'm going to deliver? Plenty of people say they send the money in the post and never arrives. Because I've also been doing it a long time. So as a buyer, my social proofing is also up. So why is that important to you? Well, the bottom line is, ladies and gentlemen, our social proofing is the most important thing we have. It's called track record. Those big developers that used to think that to sell the next development, all you needed was a good marketing budget, the fact that your last development's falling down and leaking will not work anymore. Your track record will ultimately define what happens. And from an investment perspective, this is the catalyst that is going to change everything. Then it's transparency. Most of us invest in things, we have no idea what's going on. We sent a book of accounts that is so complicated you need to get someone with a PhD in accounting just to tell you what's going on. And when you really look in, most often there's being fees fiddled all over the place, the profits are being made up, and actually you're making no real return, right or wrong. So the beauty with technology is it's all about transparency. If you go on the Wealth Migrate website, you can literally sign up based on your risk profile. You can choose an investment. You can do your entire transaction online. It took us 2 years to figure this out. Anyone here who's tried to open a bank account in America will know it is a nightmare. We can now do it in 6 minutes online, and you can move your money. And most importantly for me, someone who owns property in different places and who hates admin, I now don't have to look at my emails anymore. Because in one place, on one dashboard, I can see what's going on with my investments. By the end of the year, that will all be mobile as well. And the last one is interest being aligned. And I think this one is probably the most important one. Since I learned and understood this, I challenge you to look at every single relationship you've ever been involved in. And if the interests were aligned, it probably worked. And if the interests were not aligned, I virtually guarantee you it failed. Because if you look in nature, when birds are flying, this bird up the top is taking the most strain, and these ones on the outside are taking the second most strain. These ones over here, they're chilling. But it's statistically proven that a bird flying on its own, in comparison with a bird flying in a flock of 25 birds, the flock can fly 70% further. Because what happens is that this one at the top bails out for a while and someone else comes up to the front. And then when they're tired, it swaps again. Now, 20th century business is that this person here is trying to make all the profit and trying to kill this one to the right and maybe stab the one in the back to the left. And then can't figure out why it can't get from one hemisphere to the next. Nature's laws, ladies and gentlemen. Any business where you're not aligned is not sustainable. So let's look at what that means to real estate. Well, in today's traditional model, you've got Joe Soap. And Joe Soap wants to invest in real estate. Now, to do so, he needs to see an investment broker who takes 1 to 2%. It tends to go through a fund that takes another 1%. It goes through a private equity firm, generally a 2 and 20 model. And then there's a real estate broker that's taking another 1 to 3%. And with all due respect, I'm being kind. Because there's purchase management fees, there's financing fees, there's structuring fees, and there's I need to go on holiday fees. So what do we call this? We call it economic leakage. Because actually, all Joe Soap wants to do is invest in a building. His wealthy friends are telling them that if you buy this building, you can make a 20% return, IRR, whatever you want to call it. But when it ends up back in his pocket, he only gets 6%. And with inflation traveling at 3%, he can't ever figure out why he has to work so hard and he consistently stays poor. And the reason is, it's economic leakage. He also doesn't have access. You know, we heard a fantastic presentation in Johannesburg of the lucrative opportunities in Africa right now. There's only one slight caveat. The minimum entry for investment is $5 million US. Not that much change for many people, but for most of us, it's quite a lot. There's higher fees, lower returns we've spoken about, and most importantly, there's no transparency. So the new model is where Jill Soap invests in the property through an online platform. There's no fees, and there's only performance. The model is that there are no fees up front, there are no fees in the middle. There's only performance fees after the investor has made their hurdle rate return, sharing in the upside. Our interests are aligned. Now, in a traditional syndication, they earn their 1 to 3% up front. Their interest is to raise as much money as possible because they are not tied to the back-end result. And if you think about it, it's common sense. As much as they'll tell you they do their due diligence, their interest is to sell you as much as possible, yes or no. Under the traditional fund REIT model, their interest is to get as much money under management. It's a bit like an estate agent. You know, my house, I think, should be sold for R1 million, but they're like, oh, just take 950. But the difference in their comms is like R1,000. They don't really mind. So whether the portfolio goes up or down, their interests are not in alignment with me as the investor. When and the people are only earning on the back end, we're investors together, our interests are aligned. So how big is this thing going to get? If you've heard of the UCLA Zimmerman Center, it's one of the biggest and most respected real estate centers in America. They reckon that the size of this market by 2025 is going to be between 90 billion and 96 billion, 1.8 times the entire size of the venture capital market today. If you think I'm talking about a fad, you really need to understand what is going on at the moment. As a South African, the last why, and I'm going to go through this very quickly, but for me as a South African, there's 5 things that I need to consider about what is happening in this country for me. The first one is rule of law. I'm not going to go into that in too much detail, other than to say that in Australia and America and to a certain extent in England, do you know that it's not abnormal to kick someone out legally if they don't pay for their rent? I know it's a foreign concept, but it actually happens in the first world. Political and economic instability. This one's a good one. Has anyone read this book? Where's it gone? I've lost it now. Anyway, Julius has come out with a good book about the coming revolution. I think we all learned from Nelson Mandela, it doesn't matter what he believes in, you should roughly know what they're thinking. I don't necessarily agree with it, but I like to know what's going on. And another one that's very interesting, this came out last 2-3 months ago from Agribusiness, about the 14 different bills that are being changed at the moment with regards to your land rights. Ever heard about the frog in the boiling water syndrome? Yeah. I'm not going to go into it. We actually will do something later with them. They know a lot more about this than I do. Something Dr. DeRuis mentioned, a scary stat came out in 2010. 80% of South Africans that invest overseas actually lose money. The reason being, I believe, is 2 things. Firstly is arrogance, and the second one is that they do it in a reactive state. They fly to London for 3 days to find a good investment. With all due respect, if an Englishman flew to Johannesburg, or where we are now, Cape Town, for 3 days, would they find a good investment? Yes or no? So why do we think we can do it? And lastly, currency devaluation. Mike referred to it earlier when he asked Kiers. I must just say very quickly, Kiers is the #1 person I've learned more about economics from than anyone else. And that includes getting an economics degree at UCT. If anyone doesn't know that, follow Kiers's daily, weekly emails. They're brilliant if you want to understand what's going on from an economics perspective. When you look at the rand, since 1990, it's lost 5.6 against the US dollar. If you look at it over the last 30 years, it's more than 6% a year. It is a significant long-term trend. Just last year, we lost 24%. And as my business partner, Henny Besaiden, had said in Bloemfontein, he spent 30 years of his life trying to build up his wealth, and other than what he owns overseas, he lost a quarter of it in 1 year without him doing anything wrong. Whether you like it or not, unfortunately, it's the facts. And the last thing that I could give you as a bit of advice is this guy, James Painter. I've been following for many, many years. He has an accuracy of over 80% in tracking where the rand is going. And in simple terms, he does it like the weather. Like they forecast the weather, he helps forecast where the rand is going. And in one of his latest reports, there's an 80% probability of it going to 14 to 21 to the US dollar, and a 20% probability of it going to 14 to 21 to the US dollar. It's just how long it's going to take. Last year in March, we were sitting at 886. We had 202 people in the room. He said, we'll go over 10 to the US dollar within 3 months. I said, what accuracy? He said, 90%. 20 people took action, 182 6 weeks later couldn't figure out why we were sitting at 1026. We're like, we told you. So we created the Global Wealth Index so we as South Africans understand what is happening. And the really scary stats, and I talk a lot about it in my book. Kim, would you just mind grabbing me a copy of the book? I talk a lot about it in my book, but the really scary stats that we South Africans are losing 29.5% year on year and have done for the last 30 years. Now you can love me, you can hate me, but you can't argue with the facts. And the last thing I would say about this is in a recent article that came out in the Business Day, which really, really concerned me. Billiton, Rio Tinto, and Anglo American are divesting out of South Africa because their attractiveness has faded due to electricity shortages, labor unrest, weakening currency, and uncertainty about government policy. When some of the biggest in the world, thank you, and even some that are homegrown, that has my attention. As Clem Sander says, that's a flag. At a personal level, I'm not being dramatic, but this here is my farm. That there is my family home. That there are the new occupants of the home. They don't have title deeds, because I do. And that there used to be a very productive dairy farm. We learned a long time ago in Africa that this is a wonderful place to live. I'm extremely passionate, but I do not like to have all my eggs in one basket. So the question is, if we've answered the why, the next thing we have to focus on is the how. And a lot of people try and confuse you when it comes to the how. They try and get complicated. They try and give you scientific formulas. But actually, the more simple you can keep it, the easier it is to understand. And for us, it's very simple. There's only two parts to it. You need to get the right information, and you need to have the right partners. It's that simple. So the question is, if you're trying to look at the how do you get the right information? Who here has read the book Investment Biker or knows who Jim Rogers is? Anyone? Someone in the back? Yep. Who is he?
Well, he's an American investor, former partner of George Soros, currently living in Singapore.
Well done.
Contrarian investor.
Very contrarian. Joined George Soros in 1973, created the Quantum Fund. He's also a US dollar billionaire. And interesting enough, retired at 37 and traveled the world on a motorcycle. He set a world record for traveling the most countries by motorcycle by any one person. But more interesting for me is that for 4 decades, he has been a contrarian, and he only has one strategy. He looks at long-term trends. It's literally that simple. He says, if you were born in the early 1800s, the clever man would have moved to London. Because for the next 100 years, the British Empire boomed. If you were a clever man in the early 1900s, or female, you would have moved to New York. Because America boomed for the next 100 years. And if you were a clever man in the 21st century, you'd move to Singapore, or Hong Kong, or Shanghai. He lives in Singapore. He's teaching his children Mandarin. I said, what would you do if your son was 2.5 years old living in Cape Town, South Africa? He said, I'd consider looking around and I would learn Mandarin. I was like, whoa, that's going to be interesting to find a Mandarin teacher in Knysna. But I had the privilege of having breakfast with him about a month ago. This man is amazing. In 1970, the Quantum Fund was the only fund in North America to be investing outside of America. In 1999, he started the Rogers Commodity Index. He called a 16-market bull run in commodities within 3 months of the bottom of the market. In 2007, he came out publicly and he said, we are going to have a housing crash in America. and everyone ridiculed him. And he shorted Citibank, Fannie Mae, Freddie Mac, and when everyone else went bankrupt, he made lots of money, and everyone said, how did you know? And he said, well, you could tell me that there's some fancy statistical way I did it, or I could just tell you that a good friend of mine's sister is a crackhead, and she just got given a mortgage. And I kind of figured, we have a problem. So my question, and a quick game, in Jim Rogers' opinion, right now, what are the best 3 countries in the world to be investing in? Can't get it wrong. Come on, what do you think? Huh? Singapore? China? India? Hong Kong? North Korea? Neil, I would give you the book, but you were there on Tuesday. So yeah, interesting enough, out of BRICS, and he doesn't even consider the S in BRICS, Brazil, Russia, and India, he thinks it's completely flawed. It's only China that he would even consider in that. He also thinks the guy from Goldman Sachs that came out with that in 2001 is an idiot because he's never even been to 3 out of those 4 countries. But most importantly, those 3 countries are Angola, Myanmar, or what we used to know as Burma, and North Korea. And I do not have time today to share with you why. But if I can share with you one thing, I would highly recommend reading his book, and I'll put it up there for you now. So, how do you want to, or how do you get to know about the future? Well, you learn, and I applaud you, because people like you come to things like this. Our business partner, Henny Besadenhout, went to MIPIM in March. Who here has been to MIPIM, just my interest? Yep. What's it about?
It's the global property industry, the marketing in one place in France, setting up everything that's happening, all the major players from each country.
It's exactly that. It's the biggest property event in the world. This year has been going 25 years. It's in Cannes in France. Henny was there, and there were 2 major things that came away, 2 major understandings that he got. The first one is that there's no more time for growth and organic growth where you try to do it on your own. The only way, because the world is changing so fast, is partnership. And the second thing, in terms of 2 major areas to focus on in property, the one is medical, and the one is residential, but only in specific markets. The second one is old Jim Rogers. This book, I don't know if you can buy it in South Africa yet, but I got it in Singapore, and believe it or not, you can get anything on Amazon or Kalahari. This book I would highly, highly, highly recommend. It's called Street Smarts. It's come out recently. He talks about all the long-term trends. He talks about why things are happening, where they're going, and what you need to know about. He's not that favorable on America, as an example. But he says if you were going to invest in America, he'd invest in 3 things. The first one is agricultural land. The second one is the fracking, the oil. And the third one is the medical. 16% of America's GNP is medical. A second way to look at information. You get a huge amount of information. We've got a system called GIDS, which stands for Global Investment Due Diligence System. There's 10 different inner systems for our due diligence, but I don't want to bore you with that. I'd rather tell you a story. So who here has seen Clem Santa talk and about his 4 global scenarios and his 3 South African scenarios? Anyone? Okay. So who here has gone and listened to him talk, gone away and built a model so that when his scenarios change, you can figure out where you should or shouldn't be investing? Why not? Phone Clem. Well, interesting enough, and this is even to Clem's admission, you know, it's all good and well having information, but it doesn't matter if the variables change. What do I do with it? So I created a system, and it was 2 years ago. I was presenting with Neil. I'd heard Clem speak for at least 5 times. I created a system. I was too embarrassed to share it with him for an entire year. I'm not going to lie. And it was at Neil's event last year that I shared it with him. And he was really complimentary about it. And he made me make sure that I wrote a book on it so that we could help other people use a simple scientific system to take his scenarios and decide where to invest and what to invest in. In simple terms, it's a flag system. And when the flags come up, you need to be aware. So you guys in Cape Town might understand, maybe not Kiers, but when there's a white flag up, you don't want to swim because there's sharks in the water. Yes? Like when I was driving home the other day in Plet, and I was coming down the N2, and suddenly about 100 people ran on the road and started making petrol bombs and throwing rocks at the cars on the N2. That's a big red flag for me. We created the system, he created the system. There's 4 global scenarios. And if you want all the information, you can go to his website, mindofafox.co.za or .com. From that, we created a 4-dimensional model based on the different scenarios and the different probabilities of where and what we should be investing in, whether the stock market, the property, bank, gold, and other asset classes. They then got 3 South African scenarios. Now, very interesting at the moment, he's got 50% of us staying in the Premier League, 25% of us staying in the secondary division, and 25% of us going failed state. That is Zimbabwe or Syria. If I said when you go home from here today, you have a 1 in 4 chance of dying, would you take extra care? Unfortunately, you might not like the messenger, but that's their facts. So that gave us then the scenarios to what we should do in South Africa. And in simple terms, Clem has a great analogy. Depending on your confidence in the country, if you're 50% confident, then invest 50% locally and 50% offshore. If you're 80% confidence, fairly logical, 80%, 20% offshore. If, like some people north of the Western Cape, are 100% not very confident, they still want to live in Pretoria, but they want their money to live overseas. So I want to share with you just a little bit of real facts, because I think a lot of people talk a good game, but they don't actually know where to find the information. And what I talk about a lot in the book is ultimately where you can get... Neil, you might have to come drive here, dude. Where's your internet? Oh, there. Okay. So in simple terms, this is the best research worldwide across all 20 of the top markets since 1975. And I've just taken Australia, Britain, South Africa, and the United States. If you look at the house price index, you can see there's South Africa, there's Britain, there's Australia, and there's the United States. So from this graph, it looks like it would have been best to invest in South Africa. If you look at price in real terms, well, it tells you a whole different story. You can see Australia right up the top there. If you look at price against average income, you can see America down the bottom here, then South Africa, then the UK, then Australia. If you want to do price against rents, which in my opinion is the ultimate determination of value, you can see. And if you want to do percentage change, you can also see what's happened. Now, what about people say to me in America all the time, where should I invest? You know, which is good, which is bad? So let's just take Atlanta. I know today we spoke about Phoenix. One other city. Tell me another city. I'll add it. Which one? Memphis. They don't have Memphis, sorry. Which one?
Las Vegas.
Las Vegas. Okay. So now you can see the different markets, okay? Prices in real terms. So Vegas and Atlanta. Prices against average income. Prices against rents. Percentage change. Again, if you're looking at London, the best research in London is Academimetrics. The London market, this comes out every single month. It's not an estate agent or a bank. So ultimately, they tell you as it is, whether you like it or not. And a couple of things from London. London has grown by 20% in the last 12 months. It's the biggest growth since 2002. Housing transactions are now back to 85,000 a month. The long-term average is 90,000. 26% of buyers are first-time buyers. But interestingly enough, interest rates are the lowest they've been in 350 years. You need to go to an economics lecture to figure out which direction they're going. And what happens to first-time buyers that buy new developments when the interest rates go up? They always push themselves too hard. When the interest rates go up, they can't afford it. So the UK market, there's a lot of developments, new developments that are being sold at the moment around the world. I would really, really caution you. Prices are very, very overvalued, and the yields, the returns are as ridiculous as 1% to 2%, with a huge risk weighting. Now that doesn't mean there's not good deals if you've got the right people on the ground, but they've got to be able to scavenge for the deals. There's a gentleman in this room, Mike, that's an expert in doing that. But don't just run along and go and buy from a developer, because you will get a haircut. I virtually guarantee it. And then lastly is the Australian information. And you can see here that the Australian market, Sydney's also grown dramatically, Sydney and Melbourne. Anyone that knows the Australian market would know that it's a two-step economy, and that the rest of the markets tend to be 2 to 3 years behind Sydney. So if Sydney's had good growth, you might want to understand why we're focusing on Brisbane. It's happened over 10 times in cycles. It's kind of easy to predict where it's going. I think that gives you an idea when it comes to the information. So what we do is we like to work on real facts. And based on those facts, we take the economic risk, which is based on Clem Sunter, the value of the property, which is all based on The Economist, the population growth and supply and demand. They're the two most important fundamental drivers for property sustainability long term. And lastly, you've got rule of law. And again, a lot of South Africans don't understand how important this is, but in India, you'll see that in India it's got very strong fundamentals for the first three, but there's no rule of law. And therefore its risk weighting goes up. And on the return side, the biggest lesson I've learned in life is that those people that focus on income not only survive but thrive, and those people that focus on capital growth, it is only a matter of time until winter arrives and they go bankrupt. So we give income a 70% weighting. And what that allows us to do is on an annual basis, based on the research, you can see on a 4-dimensional graph where you should be or shouldn't be investing. The last thing I would like to say about that is that anyone that thinks that you can buy an offshore investment and get a passport as a bonus is kidding themselves. It's like buying a boat. It's nice to have, but it costs money. I'm yet, in over a decade of doing this, to have seen one deal anywhere in the world where you get a passport and a good investment in the same bucket. How do we choose our partners? Well, interestingly enough, one of our business partners who's coming down here tomorrow has just been in Kenya for about 2 weeks ago. He was in Zambia for the last 3 days. His name is Henny. He's building this hospital in Bloemfontein. He's just recently, or currently in South Africa, is building 14 hospitals. He's been in commercial medical property since 1992. Now, if I tell you that we just did that medical deal in Atlanta, would you like to invest with me, who's never done a medical deal in my life, or with Henny, that's been doing it since 1992, and having partners on the ground that specialize in medical? Which one? So there's only 3 things we look for in a partner. One is extensive experience. The second one is they need to be able to be good at a niche. Yanni Mulman, very good at retail. Henny, very good at medical. And the third one is scalability. There's no point in figuring out how to build a building in Manhattan and then never being able to do it again, and all those lessons you learned are lost. 3 things we look for in a partner. So, in conclusion, that leaves us with the what. We travel around the world, we're passionate about what we do, but at the end of the day, at our heart, we're just investors who like to help other people invest. If you look at what makes us different, as Dolph alluded to, we've got 227 years on the investment committee in terms of international experience. We've done over 10,000 international deals. We've done a value of 1.32 billion on 5 different continents. We've written 19 books. I've written 1, Dolph's written 17. And we've also got full compliance. We're very chuffed that we've got our SEC, which is the top compliance organization in the world. Now, as a matter of interest, who thinks that crowdfunding is legal or not legal in South Africa? Who thinks it's legal? Who thinks it's not legal? Who has no idea? Our South African site goes live in 48 hours. It's taken us 5 years. We've cracked it. Anyone that wants to do crowdfunding in South Africa, the wave is upon us. What we've ultimately created is the global real estate marketplace. And when you look at the world, in the next 6 months, that's where we will be. But for us, from a focus perspective, we started out in 2 major markets, because that's where the current opportunities are and where we've been investing. We also have been in Australia since 2008. And lastly, the UK, as I said to you, I bought my first property in UK in 2002. Those are our 4 major markets where we're actually doing property investment. But as a strategic focus, we opened an office in Singapore 3 months ago. As Jim Rogers says, the future's in the East. And we're going there. And then lastly, I still maintain that Africa is a massive, massive opportunity. And what I believe that crowdfunding offers you is a bridge of safety. Because when Henny was at MIPIM, all the European investors wanted to invest in his hospitals in Africa because the returns are virtually unbelievable. But they're worried about the political risk, the currency risk, the economic risk, etc., etc., etc. When I was in Singapore 6 weeks ago with Dolph, the crowd sitting in the room looked very similar to yourself. They want to invest overseas, but they're terrified to do it because all their friends have lost money. Yes or no? The same fear in the eyes. What crowdfunding will do, just like that peace of mind that I know I'll get my tickets at 2:30, and you'll all be here so we can check. Crowdfunding gives you that bridge of safety. So what have we looked at? We've looked at 3 specific things that we've been investing in. One has been residential houses in Atlanta, one of the best markets. I've statistically proven it to you. We're buying properties of 100 to 160. Notice below replacement value. Erwin Ritter's going to speak about that later. 30 to 40% below replacement value. Net yields 8 to 9%. Financing 3-year leases. And with the crowdfunding option, people can now get involved with as little as $15,000. I spoke to you about oil and how important oil is. If you understand what's happening in North America and the impact of fracking, you will understand a huge amount about the future of the world economy. And just of my interest, has anyone in this room been to North Dakota? The 2 people at the back of the room. Does anyone even know where North Dakota is? The bottom line with North Dakota is that they've just done over 1 million barrels of oil per day. Texas does 1.4 million barrels per day. The only difference is Texas has 140,000 wells and North Dakota has 10,000 wells. It's got over 80 years worth of oil, and they believe that it could be one of the biggest oil fields in the world. And the bottom line is, we went up there. I've now been there personally 5 times. As a Durban boy, minus 40 degrees is not fun. But we went up there and we looked at residential, we looked at commercial, we eventually stuck with light industrial. Because the blue-collar workers, it takes 28 people to sink a mine, or a hole, or a shaft, or whatever you want to call it, and it takes 3 people to service that on an ongoing basis. They're all blue-collar. It's called the red, white, and blue state. It's rednecks, whites only, and blue-collar. And they need to service the mines. And we're doing the light industrial, small little factorylets to help them do it. Yanni Millman was up there with us about a month ago. Go on YouTube and watch his testimonial. There's nothing better than getting on the ground with us and coming overseas and actually seeing it for yourself, whether it's America or Australia or the UK. And lastly, our medical portfolio. I've told you a bit about it. $16 million deal, 7 different buildings, 8.5% cap. We got financing fixed at 5 years at 4.23%. It was 89% occupied when we secured it, but 100% tenanted by the time we closed on it. And interesting enough, $6 million raised on 5 continents. And if you want to understand the power of crowdfunding, one person was in an embassy in Pakistan, found us through a Google ad, went on our website, deposited $300,000, and now is the proud owner in that building. So you've all got project briefs. I'm not going to go into detail, but we've got some fantastic opportunities around, both in America, Australia, the UK, and interesting enough, we've got some very interesting stuff coming up in Bloemfontein as well, both commercial and industrial. There's Australia, and the last thing I said, I want to just read you a quote out of this book, which I think is important, and I think it ultimately sums up crowdfunding in total. Abraham Lincoln said, "Let not he who is houseless pull down the house of another. Let him labor diligently and build one for himself, thus by example ensuring that on his own he shall be safe from violence when built." Crowdfunding, if we empower everyone, we will not only empower ourselves, but we will empower the future. And so, in conclusion, there's a wave coming towards you, and there are 3 different scenarios you have. One is that you don't know it comes. it literally arrives and it destroys, just like people that were riding ox wagons and that were building ox wagons. The second scenario is that you're sitting on the beach. You've attended events like this and you see it as a wave of change. It's magnificent. But to be honest, there's nothing you can do at this point. And even though you know it's coming, it's still going to take you out. Or as a surfer, it's not very good quality, but I wanted to get a Cape Town one. Anyone that understands surfing knows that you have to believe. You have to get on your board, you have to paddle out to backline. I love the fact that Keir spoke about a wave, because you literally sit at backline and you wait. And when that wave comes, you paddle with all your might so that you have the momentum to catch that wave. But you also have the peace of mind to know that if the wave's even too big for you, you're still at backline and you're safe. And when that wave comes, you can drop in. You can have that exhilaration of riding down the face, of feeling the momentum of nature, of being in flow, of enjoying the wave of change. And most importantly, empowering not only yourself, but others. And so I leave you with a gift. We're very passionate about what we do. Our vision is to be tomorrow's simple answer for like-minded property investors to create global wealth today. You've all got an investment strategy sheet, which is on your tables. If you fill this in, I'll send you a copy of my book. We will also keep you updated as to what's happening. This crowdfunding space is changing so fast, I can't give you one report or one video for you to understand it. Because I too have no idea exactly where it's going, because it's adapting and morphing so quickly. But I will give you one promise. If you share with us, we will share with you, and hopefully give you the surfboards so that you can ride that wave of change. Thank you very much.
Thanks, Scott. Well, I usually do this a lot easier. I sit in a studio, I've got a camera, bright lights, and I say, hello everybody, welcome to Ask the Property Experts. My name is Kura Chiota, and I don't have 200 faces looking at me, making sure I don't stuff up. But I'm going to do the program live. Scott, if I can ask you to come and join me. I'm going to ask Jacques to come up, Neil to come up as my panelists. Mr. Dolf Durus, Doctor, Honorable. I've got a pain in my back, eh? That's a good sprint.
Oh, yes.
Now you can just talk to your guys down in Oz and in Kiwi and not make them tackle so hard as well.
Oh, okay.
All right, we have the panelists up front. I never purport to have all of the greatest questions, but the show is called Ask the Property Experts, so the experts are with us here. Can I take some questions from the floor for our panelists?
My question is towards Dr. De Roos. Doctor, I'd just like to ask your take on this. I'm in a position where I'm able to buy commercial properties at quite low prices most of the times, at least half of what the banks conservatively value them after I bought them. So I'm sort of at a stage where I'm just trying to get a feel for how do you go to a certain level where I can do deals. I'm currently getting deals that's 10 and 20 times bigger than what I can chunk off. I'm just sort of curious to find out how do you go about getting those right partners. I've got a lot of people wanting to come in, but obviously going with the right people I think is critical. I just think you've got a lot of experience in sort of, just getting with the right people that you enjoy working with and that you can do it with.
Well, I'm going to sit with you at lunch, then we're going to chat with Jacques, and we're going to list, and we're going to be sorted.
That solved it. Are you suggesting that you can buy them at below market value?
That's correct, yes. Normally the price that I buy them at, the commercial properties, the bank in general value them at least double than what I'm buying them from after I've tenanted and fixed up and stuff like that. Yeah.
So what value are they using for them to determine how much they'll lend you? Do they take the lesser of the purchase price or their valuation?
Well, that's negotiable. It differs from deal to deal, but banks here like to do based on purchase price. But we do get them sometimes based on market value. So.
All right, because the trick is to figure out how to get them to value it at market value.
Yeah.
because then you can get a 50% loan based on market value and it's your entire purchase price. And if they won't do that, I'll buy it first, I'll sell it to you for double the price, which is the true market value. And no, I mean, you know, this is the way it works in the real world. So I'm curious, and we don't need to go into it now, but how come you can get them at half the true value? Or why would banks value them at double? Usually they're so conservative. They send in their 85-year-old ultra-conservative valuers, and they say, well, no, because they've got this history of thinking inflation can't have been as big as it's been. And they tell you that's just the way it is. So, I mean, if that's a formula you've cracked, I'd go for it and buy as many as you can. And at that point, any good partner, I mean, if you've got 100 offering to give you the money, take the better one. But anyone who comes up with the money is good. It's like, which bank should I go to? It doesn't matter. They just provide the finance. One is as good as the other. If you've got that formula cracked, I'd just get as many as you can.
So you'll be behind me when I'm sitting next to him at lunch. I'm talking to him first.
Okay. I'll sit on the other side.
Yeah. But
No, I just think he's done a form of crowdfunding every year.
Yeah, I've got a question towards the back of the room. There's a gentleman there. Yeah, but in the South African loan agreements, I've heard of those three ugly words: the lower of market value, or the loan to values of market value or offer price. They covered themselves on that.
Yeah, thank you. I have a very simple question. I'm fortunate enough that on 1 December I will be in San Diego myself. Would there be a possibility to see the property, the retirement home, with regard to the crowdfunding concept?
So, so basically, what our the best thing we can possibly say is get on the ground, come on the ground. So our whole business model is complete transparency. So 100%. You know, if you're coming to America, if you're coming to Australia, if you're coming to England, you know, come meet with the partners. If you're coming to Bloemfontein, if you don't know where that is, we'll point it out to you on a map. Yeah. But yes, the answer is you're 100% you can come and see the properties, meet the partners on the ground. The best thing to do, though, with all due respect, is if you're going over and you're going on holiday, you're often not in the right mindset. You want to spend time with your family, have a holiday. The best thing you can do, and you know, I know Neil and Dolph, and we've all done it, you know, is to take a week of your life, come over when we're going over. I mean, I know Michael, you've been over, and there's other people in the room that have done it. And invest a week of your life in your future and do it properly, meet all the partners in a systematic and organized way. And, you know, like Yanni Muller did, you're with other sophisticated investors, and you believe it or not, you've got good questions, they've got good questions, and you make magic together.
Okay. Sure, but all I'm saying is I will be in San Diego, and you guys are not going to San Diego.
Well, look, I mean, we don't, at the moment, I don't know, Dolph, we're not investing in San Diego.
I understood
other than the one you were talking about, the resident, the old Ashon, but...
Yeah,
so,
well,
I mean,
I'm
the bottom line is...
basically 5 kilometers away from it, so 10 kilometers. Laguardia is part of San Diego, so I thought maybe I could see it at the same time.
Yeah, you're going to San Diego. You want to see other opportunities.
We're talking about the example. Yeah, I was just listening.
All right, if it's the retirement complex in San Diego, personally, I wouldn't need to go there to see it. I used to walk there every day, I know it, but I wouldn't need to see it. With those 3 factors, it's by the beach, it's a retirement complex catering to what's now the increasing proportion of the population, and it's in a great suburb. As long as you're not paying over market for it, you're going to do well. But here's another differentiation point between crowd-funded real estate and real estate agent-provided real estate. The real estate agents tend to have great marketing arms and fantastic photographers and all that, and they'll make it look very good. They can make anything look good, which is good. I'm not criticizing them for that. But crowd-funded means we've got that social proofing again. And everything I've bought on eBay, and I'm sort of active on eBay in a number of different sectors, I don't need to see it. I don't need to see the seller because they provide me 5 or 10 or 20 photos from different perspectives. And it's the same with crowd-funded real estate. If we make photos with wide-angle lenses and digital enhancement to make the properties look better than they are, word would soon get out. But if we just show it the way it is, because this property is good on its own merits, at the end of the day, do the numbers work? So I think crowdfunding has that extra layer of benefit that you can't hoodwink people, to use a polite term. All right? So it's just easier to figure out.
Just to clarify on your question, we're not currently investing in that specific opportunity. Dolph was just saying that as a long-term trend, that's a good one. And I can tell you categorically why we're not investing there. We've broken one leg of the table, the 4 legs. We don't have a good partner on the ground there. We've got no one that we can trust to execute. there's millions of opportunities all over the world. If you don't have a good partner, you will not be able to execute on it, guaranteed. And so until we can find a partner, we can go to Lake Tahoe, we can go there all the time. But the point is, like, we need a guy on the ground that can find the opportunity, uncover, execute, and most importantly, sweat the asset once we own it.
Thank you. Can I ask you to ask you to take up your further questions with them over lunch? I've got a question from a young lady on the right, and welcome to the right-hand side of the room.
Thank you. In terms of the time frame of investment, how long would you invest in a crowdfunding scheme for? Should you wish to get out, how much would you get out of your original investment, or are you locked in long term?
I'll hand it over to Scott, but just to repeat it for those who couldn't hear it, in terms of the duration of investment, how long would you want to invest? How long would you want your money in before you want to see it pulled out? Is that in essence the question?
Yeah. I mean, I think in simple terms, the way that we've done it is we've got two umbrellas. We've got what's called an income and we've got a growth. The growth is where it's slightly more aggressive. It might be that stuff in North Dakota where it's factual, we're building, it's development. It generally has a 2-year window frame on capital with payments due out as per project. Because remember, this is not, you're not putting your money in across multiple projects. It's one project, you know what you're putting your money in, it's black and white, just as if you and me were doing it together on our own. And then we've got the income, which is generally a 5-year hold. It's more existing buildings like the medical portfolio or the residential properties, and it's quarterly dividends paid out.
Thank you. I've got a question right at the back of the room. Let's take that one, and then come to the young man at the front here.
Hi, just from the Neil's presentation, we want to know a little bit more about the rent-to-buy concept.
Okay, this it stems essentially from the ALA, the Alienation of Land Act, which is an act which came around in 1963, where essentially you can put in an offer on a piece of real estate from a contractual point of view. So if there's an owner that's in distress, you can go to and do a direct contract with them. You can leave those people essentially in their existing property, and you could make an offer, a today offer, so you can get today's market value price, and the property could be valued a lot more. Some of the advantages of that is that obviously, you know, the person that actually owns the current property, the whole idea is to try and keep them in there and not to evict them out and get rid of them. We heard a lot about that today, because, you know, some people, you know, trouble happens, economies get bad, all that kind of stuff, and we have this thing about, so it's another way where there's a win-win scenario over there. So rent-to-buy is taking it one step further. I know we've got an expert in the room. Where's Mayor? Mayor here. Yeah, Mayor's at the back. He can elaborate, but I think that's also a lunchtime conversation. But essentially it stems back from the ALA concept, and it's one step ahead on that. I know in the US, Dolph, you want to maybe comment on that. Is it a similar type thing in the US?
I try and simplify the concept a bit. You can sell a property outright and the buyer then owns it, or you can rent it to them and they've got the right to buy it in the future, either at a fixed price or at a price yet to be determined. And in the States, 98% of rent-to-own contracts result in the tenant not acquiring the property. So it's kind of a good thing to do because you extract an option fee from them. It gives them the right, but not the obligation to buy it in the future. But you can get caught out. We did 52 homes once in Las Vegas. 33 of them were rent-to-owns, and every one of them purchased because the market went up so incredibly great that even if they couldn't afford to buy them, they could sell the houses for even more than they'd contracted with us to buy them. So there are advantages. I'm a believer that if you're for real estate, do it for the long haul, own it forever. You know, never sell, basically. So I don't understand the concept of offering a rent-to-buy, because if the tenant exercises their option to buy it, you don't own it anymore. You've got to find a new one. That's work.
Sure. My late friend and mentor, Ian Fife, always used to say, why go through all the world to meet a wonderful woman, romance her, fall in love, only to divorce her the next day? Marry it. Marry the property. Marry the property. Okay, I've got a question up front here.
It's a question for Scott. Just I'm looking at your opportunities fact sheet and the Bloemfontein property in particular. Can you just flesh out some of the detail on that? It says 343 million rand total project cost with equity of 13 million, but you're going to phase it. So clearly, 3 phases. So it could be 100 million each. Or whatever. But it just looks like very little equity for a development of that size.
No, 100%. Look, it's a structured deal. Has anyone been to Bloemfontein recently? Okay, so if you don't know what's happening in Bloemfontein, effectively the new Sandton, the new four-ways, if you just imagine four-ways, Monte Casino and everything, it's happening out towards the N1 and there's a whole new node that's taking place there. And that's an office park development. The land's secured, it's a phased project. And in simple terms, we're buying the land for 13 million. It's getting serviced. I think Yaku's at the back there and Michiel's outside in terms of the technical detail, but it's getting serviced. I know that all in, we'll be in for about $20 million, and there's already a valuation from the bank for $44 million. 44 million rand, sorry, I think in dollars. So in simple terms, and then from there, we've already got the building partially let. There's a whole feasibility that we've got outside if you want to look at it. But just like everything else, it's complete transparency, and the number one thing that we've achieved there, which we always do, is we've got partners on the ground that are only participating in the back end, not the front end. No one's earning fees in the process.
Good. Thank you. I've got a question here.
If you want to get out of this, the crowd, if you want to get out of the crowd investment, how does that work? So you're in the investment, you start, and then you want to leave it.
Look, to be honest, it's not, at the moment where the market is at the moment, it's not too dissimilar to you and me deciding we're going to buy a house together. We agree we're going to hold the house for 5 years, and then in 5 years we make a decision as to how we're going to exit. There is actually one of the most exciting things, which I didn't have time to tell you, but one of the things that's going to change the rules of the game is there is actually a secondary market coming into place. There's a big company that actually manages and underwrites and has the facilities for 85% of the world's REITs. They've got over 100 million clients. And they're looking to create a backbone for a secondary market for people to be able to move. So ultimately, the best advantage or the worst problem with fixed property is liquidity. And this will actually provide with the liquidity. But at the moment, in simple ways, there's no better way to describe it other than 2 friends, 4 friends, whatever it is, getting into a deal, agreeing what the window time frame is. But then the way we've set it up is from an investor mindset. You know, I know someone personally, there were 4 friends that bought a great building in London. And their 5-year window period came into being in October 2008. And even though it was a terrible time to sell, they were forced to sell the property. So it's got a whole lot of protections in it so that with an investment mindset, we investors can invest together.
Thanks.
Does that answer your question?
Kind of.
Depends on the project. In simple terms, 2 or 5 years, depending on the project.
I'm just talking, say, for instance, in a hospital, and you know, things happen, and you're now in a situation that you need that money out, or that money out of that asset. And it's not on a contract or a timeline or anything.
At the moment, well, there's a contract. There's a contract for 5 years. So at the moment, you're in the deal, that particular deal for 5 years. I'm sure you might be able to find a friend or family to be able to take you out, but we don't guarantee some sort of liquidity or tradable market.
It's not guaranteed, but usually there are rules in these things, and if you have some need to get out, there are rules as to how you can do that. Firstly, you'd have to offer it to other investors in that group first before you go to outside parties. And those rules get changed and modified as time goes on, as we learn more about it. But there are mechanisms to get out if you're in need, absolutely.
The thing with crowdfunding, guys, it's not a new rocket science you've never heard of before. It's 80 to 90% of what you're used to. It's just technology enhancing it. And the one thing I didn't say is that the biggest risk we have in crowdfunding is that there is going to be a spectacular crash in the next 5 to 10 years. I don't know when it's going to happen. Because we heard just 2 weeks ago, there's over 1,000 real estate crowdfunding sites worldwide right now. Dolph and I were 2 months ago in New York. It's a bunch of young 20-year-olds that are IT people that are building sites. They use fancy terms like curatorship. Does anyone here know what curatorship is? Okay, well, us property people just call it due diligence. And they try and use fancy terms. And the bottom line is, just like when the .com, boom, bust, whatever, the Googles, the Facebooks, the Amazon will prevail. But you need to understand that you want to deal with property people that understand technology, not IT people looking for the next opportunity.
Great. Thank you. Can I get any further questions? Last question from the gentleman at the back. I feel maybe I'm at an auction. Here we go. We're coming in with the gentleman with the question at the back. Before I release the panel, the one with the long hair is going for the most money.
Hi. Probably a question for Dr. De Roos or Scott. In 2001, South Africa faced similar uncertainties, and the currency then strengthened to unprecedented levels. And we also saw one of the biggest bull markets on share portfolios and properties, and people then got burnt around about 2008, 2009. What makes 2013 and 14 different from that phase? And sorry, just one more question. Who are the auditors of Wealth Migrate?
Grant Thornton. But do you want to answer the first question, Bob?
There are always short-term cycles and there's the long-term trend. And the philosophy I try to adhere to is you should never work on short-term cycles. You shouldn't buy in the expectation that it's going to go down or hedge your bets that way, or buy in the expectation that in the next 2 years it's going to go up and then you sell. If you look for short-term gains and profits, it's essentially what many people on the share market do, not all, but many, then you have to be trading it all the time. But if you're in it for the long haul, if you invest in areas where there's an increase in population, because we all know there's a very strong correlation between population growth and capital value growth, then you will get dips. The dip in America was the biggest in history in real terms, and even in absolute terms, even in real terms, it was proportionally one of the biggest dips we've had, but we've had one of the fastest recoveries too. So if you're in it for the long haul, then you can ride through those trends. Remember, you're not using your own capital in many cases. You're sourcing bank capital or third-party capital, so you're leveraged in that sense. We all know that means your downturns are also leveraged. If you buy just before a crash, you're in some serious trouble. But if you buy not everything on one day and hope that you're not just before the crash, but you've been buying a property here and a property there, and you do it over a period of 5 or 10 years, then you will ride through those waves. So I hear your question, what's going to happen short term? Have a bit of spread. Some people spread themselves ad infinitum. They buy a few shares and a few options and a few futures contracts and a little bit of real estate and some candy and some goodness knows what. I believe in being spread, but in real estate. So I'm in real estate, I'm largely in commercial, and then you want a geographic spread because the world is going global, and I wouldn't put all my eggs in one basket. Anyone who does, I think, is foolish, and America's very much to blame. This. Not only are American individuals completely within America, I think fewer than 1% even think in terms of doing anything overseas. They don't know what other currencies mean. They don't know that they have different colors and sizes for the different notes. So be geographically spread, have a spread amongst currencies, and then you're almost immune from that. As one goes down, you've still got 6 others that are going up.
Okay. I heard eggs, I heard baskets, I heard spread. It's lunchtime. I'm going to ask the following. The ASAQS members, the quantity surveyors, or brick counters as I affectionately refer to them, Herman Bosman, Shahid Isop, Lucius Snell, Timothy Smith, Sherry Smith, and Willie Viljoen, to see the ever-lovely Lynette at the front to get your CPD certificates for attending. Lunch is served at the restaurant just out the way. My best impression is out the doors, to the left. We do have kosher and halal meals for those dietary requirements, but we'll see you back here in about 40 minutes. Thank you.